Good morning, everyone, and thank you for joining us on Morning Markets. Today, we'll focus in on what happened in asset markets over the first quarter and also the surprising decision by OPEC overnight. So just looking briefly at how asset markets performed in the first quarter of the year. Probably a quarter that was characterised by a number of changes in market attitude as we moved through. None more evident than in the month of March when we had concerns about the banking system with the failure of a number of banks in the US, including the 15th largest bank, Silicon Valley Bank. And also in Europe, we saw the rescue of Credit Suisse by UBS. And that certainly did provide a very volatile environment for sovereign bonds over the month of March in particular, with, in the case of the US 2-year, it generally moving over a period of 10 days plus or minus 0.2%. Significant volatility there for market participants to digest. But really, why do I highlight that? Because sovereign bonds over that period certainly provided the positive return that investors would be wanting in periods of stress, and certainly concerns about the banking system really evidenced that over the month of March. Equity markets themselves, slightly better, which you maybe find surprising, and in particular those markets that are more impacted by growth assets, so the NASDAQ in the US up over 17% on the quarter. I think other things then to come on to is really the surprising decision by OPEC and OPEC Plus over the weekend to step in and cut supply of oil into the global market, reducing supply by 1 million barrels per day. That's about 1% of global demand, but what it does really indicate is that willingness of OPEC, as they saw maybe demand weakness as a result of China not coming back as strongly, concerns about the banking system feeding into weaker demand. Oil prices did trade off as we came to the end of the first quarter. Certainly overnight, Brent has moved back into the mid-80s, around $85 a barrel, up 5% on the day. This is really an important event because what it does suggest is that OPEC want to maintain prices at current levels, and that presents a bit of a headache for central banks as they look into the challenge that is still there with inflation at elevated levels relative to their targets. So oil used across transportation, but really at the heart of manufacturing. So it will be something that certainly central banks waking up this morning wouldn't have been appreciative of this change from OPEC. Thinking about inflation and jobs, one of the key aspects that we've discussed in recent months has been the strength in the US jobs market. We'll get a very important reading on that on Friday, and we'll discuss that next week. But please do join us over the course of the week as we discuss key trends in asset markets.